Everyone, Charles here. 10 past 11 local time here in Milan. Just a quick update in the markets now that London has opened. We've seen some intention coming from the market. So let's have a look at Euro US dollar. So, two potential areas that I like on Euro US dollar, of course, at these lows is where I'd absolutely prefer price to come back down to. Nevertheless, reacting in regards to what the market is currently showing us, it's giving me a sign for a potential long setup from this area as a result, simply because of that bullish move that's come out of the market. That bullish move has then indeed broken some intraday structure points in the market that, if price is then going to come back down to that area after confirmation, absolutely required, I would say, confirmation. What's the main reason for that? Because the better area is down there at the lows. Bigger picture type of stuff, we are rejecting that weekly 50 EMA down to the lows. If you look at the top right hand chart, that's a weekly time frame, perfectly wicking into that weekly 50 EMA. And then bottom right hand chart, you can see the daily time frame as well. We are simply in and around that daily order block, looking for the rejection to go long for the end of the week, potentially up towards that daily 50 MA before rejection short, and then in the immediacy looking for targets towards that 4-hour 50 EMA as well. Why do I like that? Well, as you can see on that 4-hour time frame, price wasn't doing anything at all. If we look at where price was capped, we can say there. Then in the standard fashion that I would be looking for price to do something different from that area, then we've seen the bullish candle close above that area, and like more often than not, as a result of seeing price capped at an area, you then get the break above, the pullback, and that's why we're looking for the long setup there on the EU. Then, as we can see, of course, down at the lows, that's the preferred place. However, as I've said, this is what price action is doing now. Capped, we've broken above, pullback. It just makes sense, right? So we're using the facts to base our story, and then we're looking to trade those facts. So that's EU. I like it. Let me add an alert just here. Again, you can see clear reasons why you would need confirmation at this level. So let's see. And then while I'm here, if I paint the picture for the better scenario, in fact, if price actually broke structures points here, then come back, then absolutely this becomes the more valid point of interest as a result of the most recent break coming from that area. So this is what I'd love to see. More often than not, what I love to see doesn't always happen. This is what I prefer not to see, but nevertheless, it's a good position. And of course, here would be the preferred long position without getting that break. So that's Euro US dollar. I'll try and keep it nice and snappy in one quick video for everyone. EG, again, it's not my favorite, but again, reacting to what price is showing us, we can understand why we would potentially be looking for a long position. But with that said, if someone was to ask me, well, do you prefer to long EU or EG today? I would overwhelmingly say, I'd overwhelmingly say it would be Euro US dollar. And if we look at the same reasonings behind, we're at a point of interest. Of course, we can see that better on the daily time frame. Daily order block price is failing to break below. Refined area down, we can see we are operating within that 4-hour order block again, where price is failing to break below. Therefore, it becomes a point of interest where can we see signs or a setup plus entry criteria to look to take price towards the upside. The only, excuse me again for my cold and allergies, the only difference why I would much prefer not to take the long here is if you look at that daily time frame in the bottom right hand corner, we are respecting that daily 50 MA. As you can see, price broke above. We came into it respected to the upside. Now price is now broken below, and as you can see, as a result of yesterday's daily candle, we in fact tapped into it and rejected it to the downside. So if you look at the 15-minute time frame now, you can better see exactly where that daily 50 EMA is. The question then you must ask yourself, do I want to be taking a long position into a daily 50 MA where I do forecast that price is looking to tap into and reject? there's your answer. So whether or not you want to take EU or EG, again, overwhelmingly, Euro US dollar seems to be the preferred pair. But nevertheless, we cannot hide the fact we are in a point of interest with confirmation. If it makes sense, you could look for a position. However, if we were to do exactly the same, if I backtrack slightly different, here is a point in the market that price is failing to break above on that 4-hour time frame, and we are still yet to see a bullish 4-hour candle close above that area. So with that said, again, EG, not to say it's an absolute no, but I don't have the confirmation I have on EU. Therefore, although it is a marked pair that I like, I do need to see price break above this area, pull back into this area of interest. Again, confirmation absolutely required, because we have the anticipation that we are going to actually reject that daily 50 MA for the day. So to be quite honest, EG is certainly not a favorite. It is a setup, or a potential setup nevertheless. But the EMAs for me are the highest contributing factor, why I'll more than likely skip this pair regardless of getting a break above. If I do get a 4-hour candle closure above this area for better scenario, that would I should say that would make much more sense to then take a long position there on EG. Let's have a look what we got. AUDUSD. I like it. Do I like it a lot? Well, again, two potential areas. We can see overwhelmingly, if we start with, let's go with the 4-hour time frame. How is price rejecting, or how is price respecting that 4-hour 50 EMA? Well, the most recent candle closed bearish below that 4-hour 50 EMA, and the 4-hour 50 EMA indeed did its job in terms of rejection. So if price is going to come back up to that 4-hour 50 EMA, potentially retest previous 4-hour daily highs, 4-hour candle highs, then it would make absolute sense to take a short position down. So then if we also concentrate on the structure points on AUDUSD, we can see that price was making, let's say, highs. Then as a result of this higher low now being broken to the downside, we were waiting for the pullback. We had the pullback into this area of interest towards the left hand side, and since then we've had the rollover. So as a result of that rollover, looking for price to pull back up into an area for continuation sell off. Does that make sense in terms of looking for a sell position in and around this area? Absolutely it does. We've got the confirmation and confluence from that 4-hour 50 EMA. So if I bring you now to the 15-minute time frame, we've got those two 4-hour order blocks, one up at the highs that's already been mitigated, but the 15-minute order block still remains there for the higher probable short position. And in fact, this is something that I'd actually be considering taking a sell limit if I'm not going to be at the charts later on throughout the day. This area here, most certainly not a sell limit for the reasons that I've explained previously. If you've got two areas in the market, you really want to be having confirmation at least one of those areas to have to allow you really to trade with a bit of confidence. You know that price is always looking to gravitate towards the highs in an area. So here, up at these highs would be the best position where I'd forecast to take a short from. However, leading with what we've said previously and understanding what the market is showing us now, 4-hour order block, 4-hour EMA, rejection. We've had intraday breaks of structure. Where has that structure come from? If we work our way back up this leg, the highest 15-minute order block is very much so there. So if price comes into that area, I will indeed be looking for short positions post confirmation. We then have Asia's already be filled, so we lose that confluence. However, we've got Asia down there at the lows that price could well be looking to fill. And then, as we've said, I've not mentioned just on this call, on this recording, towards the end of the week, we are looking for those higher time frame pullbacks. So what would that mean? Well, we've got the daily 50 MA down at the lows that we could look for price to gravitate towards for the end of the week. And then we've got the rejection from that 4-hour 50 EMA, which in fact just gives us a nice trading range. As you can see here, I'd be happy to take shorts from this element, and I'd be happy to take longs from these areas. So that's our trading range. And if we can manipulate the setups and entry criteria between those areas, then of course that is what we'll do. So I've got an alert set there. On that 15-minute order block, and I'll be looking for confirmation shorts from there. So that's AUD US dollar. GCAD, I like it. Why do I like it? So if we have a look at the daily first of all, that's where my bias stems from. We are in a higher time frame daily order block, all the way to the left hand side. From that order block, we can simply see where price is taken off from that area. Therefore, we refine that area down and see where we lie. The difference here, we have no supporting EMAs to help us in terms of looking to go long, but what we do have is a refined area on the 4 hour, which price has just tapped into. As a result of tapping into that and pushing away, we can see a slight intraday break of structure as a result of that bullish move that's come post London. So that in itself, excuse me, that's all my alerts going off. That in itself has then allowed us to select and highlight the imbalance here on the 15-minute time frame. Is it my favorite? Absolutely not. And if I enlarge the screen, I shall show you why it is not my favorite. If you look at structure, sort of bigger picture type of thing, we can quite clearly see that if I bring my drawing tool, we have made a low from this area. This could well be the lower high for a lower low, and in fact the lower low was created. So therefore, anytime price is in the vicinity of this area without taking out this high, we are indeed simply searching for continued lower high for a lower low continuation, just in line with trend. Therefore, again, confirmation. Charles, why do you always talk about confirmation? Because taking a position here after a low, lower high, taking a long position when price is actually looking to create a lower low is not where you want to be in trading. You want to be, if anything, if you are going to be looking for a reversal type of trade, you want to have the confirmation to take the leg on the pullback, not so much the leg when price is looking to make the low. Therefore, confirmation absolutely required. We also have to understand with no EMAs, we're simply reaching for the EMAs. We don't have the support from the EMAs like that, for example, where we can say, okay, well, we've got that daily EMA, price could tap into it and then go. We have to understand we do not have that, and simply we only have a slight intraday break of structure here on the 15-minute as a result of one bullish candle. So confirmation is absolutely required here. And then with that said, based on the pairs that we've already gone over, is this the best pair to be trading? For me, it's not. However, as I always say, we use the facts of the market, create the story. If it makes sense, we take a position. So overwhelmingly, the better position would be if price would actually just break some highs, break more highs, then come back with leaving this available. Then after confirmation, look for a continued long position up towards our most active EMA, which would be the 4-hour EMA, before we look for a potential rejection short. If I bring you to the 4-hour time frame now, we can see that we are trending towards the downside. The EMA is supporting the trend to the downside, and that is indeed where we'd be looking for potential rejection to take price down. So that is GCAD. If I return back to the 15-minute, as you can tell, that is not my favorite setup, particularly if price just comes back now. I would probably not look to take that trade based on the facts that we have much better pairs that look a lot more appealing. So that's GCAD. US dollar CAD, I like it. Why do I like it? So let's go to the daily time frame first and foremost. We are operating in a range, to be quite honest. We've got clear highs and clear lows in the market. In fact, I'm not going to go over US dollar CAD. It's the trade for me, US dollar CAD, is just going to be right there up at the highs again. So I took a short position from here, closed it out, and the better position is if price simply returns back up to those highs. There isn't a way that I can look at a 4-hour order block here based on the 4-hour 50 MA. There's just nothing there. Of course, if you were to look at this objectively, you can see there is a break of structure here. Then after that break of structure, we've had the low. You want price to look to come back up to the highest point before taking the lower low continuation type of trade. Therefore, on the 15-minute, I know I said I'm not going to break this down, but it's quick enough to do. We do not have continued breaks of structure, in my opinion, that make good enough sense on the 15-minute time frame. We can see a clear low in the market is here, and failing to break that allows me to simply believe that we are still just bouncing between these areas. So for me, the best position is right up at the highs, and I'll look for confirmation shorts down. Apologies, ladies and gents, I am very much so under the weather, but let me get these out to you. GU. What can I say about GU? I'm in a GU long. I took that pre-London Open based on factors I shared in Frgnt Mastery. Regardless of not being in, or regardless of being in that position, I can still objectively analyze this pair and understand that the better position again is down here, down at the lows for that longer term or higher probable position, in my opinion. Up at the highs, would I entertain that? Well, based on the 4-hour 50 EMA, based on the 4-hour order block, I do like it. Also, based on 4-hour structure, we have made a new low in the market. And if I do what I always do, just simply here's a lower low, lower high, lower low, lower high confirmed as a result of that lower low. So again, if price comes into that area, I'm expecting a lower low continuation. However, the upset to that, the conflict that we have, is price is bouncing off that weekly 50 EMA. So does it make sense to take a short position back down into, a weekly 50 EMA where I am expecting rejection from? Would it not make more sense to look for a long position? It does, and that's why I took a long position this morning based on the fact we've got that rejection from the weekly 50 EMA. We had some nice imbalance on the 15-minute, and I took that long position. So nevertheless, again, we use the facts to see what we have. If I am asked, would I prefer longs or shorts on GU, I would say I much prefer longs. Why would also that make sense is because I'm expecting DXY weakness. With DXY weakness, pound should go up in correlation to a weak dollar. So that would make sense there. We also have the weekly 50 EMA that we've spoken about. If I bring you to that weekly chart on the on the top right hand side, you can see how we are rejecting that weekly 50 EMA. So again, does it make sense to sell into what is already rejected? No, it doesn't. However, if you are able to get to break even sooner rather than later and not giving any expectation to your short position, and it makes sense, and absolutely take that position. I can see here how a short position would make sense. We've made a clear low, breaking structure points from this area here. We've got that 4-hour order block where it makes sense on the 4-hour time frame, supported by that 4-hour 50 EMA refined area down. You can see exactly where that 15-minute order block lies, right there up at the high. So post some confirmation. Why confirmation? Because of course, as price starts to come up to that area, we have the knowledge that we could well indeed be rejecting that weekly 50 EMA for the end of the week. Therefore, confirmation is your last port of call before allowing yourself to trade with a little bit of confidence by having that confirmation by way of confirmation, up at that area. The 50-minute order block that I have here, it's simply a management point for that GU long position, where I was looking to take a proportion of the trade off the long that I have. So that is certainly not an area where I'll be looking to take a short from. And again, the reasons why you can see this order block has not broken any structure would be slightly different if, as a result of that order block created, we broke structures to the low potentially here, or even better, if we broke structures there, we'd have the pullback into that area for continuation shorts. But at this time, it's simply an imbalance in the market where I'm expecting a slight rejection from before price should hopefully move further towards the upside before potentially a rejection short. Let's see what I've got behind UJ. Don't mark up UJ, but I can very much so eyeball it. Someone in my household trades UJ, so if I'm to simply put some order blocks on this pair, I can understand why a short position could well be taken from in and around this area. If you look to the left on the 15-minute time frame, we can quite clearly see that price is making lower lows, lower highs, lower lows, lower highs. We've had that lower low in the market, so we're looking for price to come back up towards that area. Is there an order block, or rather was there an order block? The yes, there was. Price came into that area. It broke above, unfortunately. So that is a sign for me not to get involved in a short position. However, again, as a result of the move that has just occurred, that has created those bullish engulfing breaks of structure. We have on UJ a bearish engulfing break of structure. So we can't underestimate that. We can't avoid it. But nevertheless, you do have, or I should say in addition, you do have some reasons why UJ would make sense. You have Asia to be filled down at the lows. Price on the 15-minute time frame is very much so bearish. We have broken continued structure points to the left-hand side. We have also Asia available to the left here. If I clone that, I won't take your time by naming it, but you can see Asia is available here to the left as well. But then in reverse, you have Asia to the upside. So it's certainly not one of the pairs that I do trade. Nevertheless, you can see why it would make sense if you look at the daily time frame as well. Just to give some context, we are trading within. In fact, no, don't like that at all. We have broken above that daily order block. Let's see here. So UJ, regardless of what my household may or may not be doing, I don't like it personally. As a result of that break, I can simply understand it. But looking at the pairs that we already speculate on, I'm more than happy to wait for everything else that we have in the market. So thank you very much, everyone, for your attention. I apologize for my voice and the amount of sniffing going on, but it's that time of the year, unfortunately, for the allergy sufferers. So all the very best in your trading day ahead, and I should keep you guys posted if any of my alerts go off throughout the day. All the best. Take care. Charles.